Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. This is the weekly Forex forecast for the week starting of 14th to the 19th of July 2019. Previous week was a very tricky week where we saw a lot of zigzags. At the beginning of the week we saw the reaction from the non-farm payrolls and the market that was surprised by the good numbers and that valued as the chances of rate cut in US as very, very low. And then the speech of Powell's as he was testifying in front of the Congress changed the direction where the wind blows, and we see the anti-dollar moves and might continuously change that from here on. The expectation from the market after the speech is that the Federal Reserve is, despite the good numbers from the non-farm payrolls and the CPI, will still go and give the market what it expects, or mainly Trump what he expects, and cut the rates. So let's begin with our preparation for the coming week, see the opportunities as we have them. As always, on Monday I will publish this text format. The idea of this text format is that this is the summary of the weekly forecast. Just to remove the pen here. So what we will discuss now on the forecast will appear here in my blog on Monday. So what you have to do is just to go to the blog, vladimirribakov.com, or just come back to the video on Monday, and below in the description you would find the text format link for your comfort. Basically you can all go back to this page always and find all the charts ready for you to remind you the main idea. So we will now review the previous week to see what worked, what failed, what has to be updated, what has to be added, and we'll discuss about the opportunities as they come for the coming week. So the first one is the euro versus the pound. The critical area we were looking to deal with is 0.90, 0.91, and as long as it holds, this is the plan to look for sell opportunities. These are the trend lines that we were looking to see the break to start finally and gain some momentum. So this is the most recent trend line and it's being broken. Of course, if we can start to create some lower low structure, higher lows, lower lows, would be great. But the idea is we are after sells. The way I see that, the euro versus the pound should find its way to a correction. It could be in two waves, or it could take us into some kind of a range. And by saying that, if new highs will be created, still remember the area of 0.90, 0.91 based on this double cycle is the most critical area, and the pressure with every rally should be to the downside. So as for myself, I am looking for sell opportunities now as we stand below that trend line. And before we move on, if you are new to the channel, I would like to invite you to subscribe to the channel. To do so, just click the link below in below the video, and remember to enable the notification sign. And also, if you enjoy the work, please leave your comment, hit the like button. Your support helps a lot. Share the video with anyone who you want and who you believe can have any benefit by watching it. I would like to invite you to join the free Telegram we have with trading ideas, education, videos, and many more great things for you, totally free. Just follow the link below in the description or in the comment section. And to join me in my live trading rooms in Traders Academy Club on daily basis, where we go over all the most interesting instruments and supported by trading report with all our trading ideas and setups as covered in the live room. Now let's move on and continue to the next one, which was the pound versus the Aussie. The expectations we had there is to get this double wave cycle from the daily chart pushing lower, so rallies to be sold. Let's take a look how this one worked for us. This is the pound Aussie. Here we are. Okay, that's the double cycle we expect. Since 61.8 was cleaned, The idea here is to see and sell the rallies, and this plan still remains as it is. So I believe this pair is going lower. If it will create any retraces, it's still for me as a sell opportunity. I will be looking only for sell opportunities, sell setups during this week with any bearish evidence. Trendline breakout with bearish divergence, false breakout followed by bearish divergence, and so on. With any strategy you work, the direction I will be working here is selling setups. Next one on the list, we had dollar Canadian. The idea was to hold around the 130 and to create for us any kind of correction. Two waves or a range, that's the normal correction we deal with, 1, 2, or any range. So let's see what happened since then. This was the first place, and this is the second leg. Yes, it was short, but the market completed its expected. Now it also broke. It also built here kind of two waves inside a consolidation or a ranging correction. This looks like temporary thing and seems like the market is preparing us for the possibility the pair is heading a bit lower than the 130, still surrounding the 130, but a bit lower to rebuild and recreate this divergence. So I would be not surprised if the dollar CAD continuously now, after making the two waves correction we were expecting, smaller a bit than we would maybe wish, but still provided the corrective cycle which was expected by the market, two waves, now continuing to lower levels. Based on the weekly triple cycle, the targets for dollar CAD stands around 129, slightly lower, and based on the expansion of the developing cycle, it's pretty much the same place. Moreover, the double wave correction from the weekly cycle also brings us towards the same classical area right here. So we might go and see that pushing a bit further to the downside, and the idea is back to bearish as long as this divergence would not be completed. Once this divergence is completed, game over, cash out, we'll be starting looking for the buy opportunities. So that's for the dollar CAD. Now the EURUSD was our next plan. Sell the rallies was the idea here. EURUSD, pretty much, as you can see, it speaks for itself, right? Got the rally after the convergence. This was the convergence principle, full convergence, sorry, and we got a beautiful continuation according to the weekly cycle. I want to remind you, we are after this triple cycle double wave correction or a range correction. So the way it looks like, there is still room to go. The way that the daily cycle, sorry, is developing, that's the targets we can expect. And wherever the divergence would create and hold, that would be the place to cash out. Meanwhile, our plan was and remains bearish, and we have a good run on this one as for now. So the view was and remains bearish. Australian versus the dollar, the bullish view that we were holding provided us two opportunities, two waves and a range, two waves and breakout on or a range hold and continuation further to the upside. At that moment, here we are, we got the two waves push. No classical two waves retrace because the pullback here was pretty small, but it's yet divided into two parts of the push to the downside. Cleared this area, which was a clearing zone, right, and retraced since immediately. The best part here is the bullish hidden divergence, which started a bit earlier on right here. It started here, right, in this place, then it went into deeper correction and a rally by itself. So there was the expectation for this pair. As stated on a previous week, we are facing here a triple cycle from the weekly time frame. False breakout, bullish divergence is in play. Daily chart supports that beautifully. So daily is the one that has to make the corrective cycle. So the idea is two waves or any sort of a range. The idea is retraces and buys, and I hold the bullish view. I expect it to push higher. The levels to pay attention to, I would definitely be watching the 38.2 up to 50. And if we break through this level, which I believe that should happen at the end of the day, the next levels would be 0.73 plus up to 0.75. So I hold my bullish view on the Aussie versus the dollar. Aussie franc, another good pair that had two waves down on the weekly time frame. And a bullish divergence provided a great opportunity, broke the trend line and started to be bullish view by itself. The idea was get the retrace and buys. So here we are, we got the retrace. The idea for this pair is yet bullish. As long as this low holds, which for me is in the validation area, the idea here is to look for further rallies and bullish continuation. I expect that to do two waves correction as well. So you can see these Australian pairs work good so far, and one that is not developing yet as fast or efficient as would expect is the Aussie Kiwi. The idea was to get a break of this daily and continue to see the rally, retrace and buys. Now the problem was, my view remains bullish, but the problem we had here, that the retrace and buys got tricked. And how? That the retrace was straight below 61.8. Straight below 61.8. One lag, one shot. This is always a warning sign from my point of view. And that's why it's good to step back or reduce exposure when the market does not give you as you would expect. My view remains bullish. As per the long cycle, I want to remind you that monthly long-term cycle here, the way I see that is bullish. So I'll be looking for any long-term buy opportunities. And I believe that this breakout still is relevant. We'll be looking for rallies. We'll be looking for a rally from here, or if it decides to make one more low with the next divergence to tick. But for me, the idea was and will remain looking only for bullish opportunities. I expect for this from this pair to continue higher. CAD versus the franc. According to the monthly cycle, we have a triple push down, triple cycle. So I expect two waves to the upside. Weekly made its structure and the correction. Daily provided the end of the correction by making a false breakout and bullish divergence, and now a convergence. The idea is retraces and buy. So far the retraces are building up. Let me just find the, here we are. So far the retraces are building up. We are good with two waves and continuation. We are good with any sort of a range and then continuation. The idea here is retraces down with bullish evidences looking for the buys. Of course, the most critical levels would be all the Fibos. If the 23 holds, if not 38 up to 50 would be the box of action for this pair. So the bullish view was and remains. We got the first part of it, the correction, looking for bullish evidences and further rally continuation. Aussie Yen, the idea is also bullish, divergences, convergence that came in plan. The idea was retraces and buys. So not much happened with the Aussie Yen yet, right? We're holding here some sort of a range. I still expect, as per the weekly divergence, that the daily cycle would be the one that will provide the two waves at the end of the day. So for me, the bullish view remains completely on. And again, like with all the rest of the Aussies, I expect the second leg to happen on this pair. And before we move to the commodities, a very interesting opportunity coming in play. First one, the euro versus the franc, which is developing right now, the second weekly cycle. Bullish divergence already starts to show itself, and a daily time frame that refused to create any momentum out of this consolidation, having a bearish hidden divergence, most likely pushing it slightly lower. So as per the daily cycle, if we measure the levels, you can see that we have one critical area here, but more critical closer, slightly below the 110, closer to 109. So I would expect here a bullish divergence to form and a rally to begin. So looking for bullish evidences on this area. That could be false breakouts, a great candle pattern structured followed with bullish divergence, and of course most recent trendline breakout after the move down completes with a bullish divergence. So looking for bullish evidences from 110 and slightly lower for the euro franc. Next one is the euro versus the dollar. The weekly time frame cycle is still in play. Was a bit neutral previous week. After the speech of Powell, it's booked back to bullish. The expectations are for the rally towards 116. Daily chart is holding this bullish hidden divergence, so I would expect the euro dollar to continue to the upside. And the final one is the pound versus the dollar, which is yet holding its bottom of this ranging cycle of 125, holding a beautiful psychological zone and making a second false breakout on this low. Moreover, it was a bullish regular divergence that turns to be a fake convergence. MACD histogram trying to make lower lows while the divergence is in play. This normally is a very good sign. So we have this trend line, we go above, and that should be a very good sign to the bullish direction. So the way I would be looking to work with that is the daily trend line, also the 4-hour chart trend line. If we go above that, looking to buy retraces, should be a very good opportunity for this pair. Of course, if the trend line is not broken, we have no signs to deal with. And that's pretty much it. That's my most interesting opportunities. One more coming on the list is the New Zealandian Canadian, which forms second false breakout here, making the 61.8 leg of this double cycle. So I believe that if we go above this trend line, we can discuss about correction. So break off this falling trend line and buy retraces would be a good plan for this pair. Can mark it here, of course, going above that, and buy retraces would be a good plan for this pair. Invalidation for this setup basically, of course, is the most recent low. This should provide some pullbacks opportunity before further move to the downside will take place. And now we are back to the commodities. Gold, the idea remains continuously looking for buy setups, two waves or a range, and bullish continuation. Not much happened with the gold, which is basically moving exactly in this range, as we expected. Some sort of consolidation. Why is not drawing? Sort of consolidation where I believe we should see further upside. This is the one I'll be working with. Coffee, we discussed in the previous week. Great one for a cash out. And that's pretty much it. No new. And Ripple, the idea was to get one correction to push to the upside. And here we are. Well, now it's moving lower again, but here we are. One correction, two. The second leg was pretty small but rallied until it created a bearish divergence against the rally, and since then game over for the short-term bullish view we had. The cryptocurrency pushing lower. As for now, nothing obvious from the daily chart, so I don't see new exciting trading opportunities with this one. That's pretty much it. That's the great opportunities as I see them for the coming week. Also, very important to remember, despite of the very exciting events happening around the world, it's summertime. Some of the days might look extremely boring. That's normal. The most important thing, do not find yourself forcing a trade. This is the worst thing could happen to for a trader. But when you start to force, like, oh, it's not moving, maybe here, this maybe is the very, very, very worst enemy of traders when there are no opportunities. If the market is not moving, don't think if you will force it or you draw the lines differently, it will move. No, our lines never make the market move. It's important to remember. You make your predictions, you make your plan, you trade your plan. If it doesn't happen, you don't force. As simple as that. So that's pretty much it for this week. It looks like we have several great opportunities. Some of them are still running and paying, like the Pound Aussie, Euro Aussie, and a few others. Some of them looking like catching up and will provide the opportunities. I invite you once again to my live trading rooms on daily basis to join us and enjoy our trading together in Traders Academy Club. Just follow the link below in the description or in the comments, and I'll see you inside. So thank you very much for your time. I'm Vladimir Ribakov from Traders Academy Club, and I wish you a wonderful trading week. Ciao for now.